Well, thank you, Minds and Money, for having RK Equity help curate another two panels here at the quarterly Minds and Money Online Connect. We have two non-lithium companies and four lithium companies today, and one actually non-battery material, although you can consider iron ore selectively a battery material, but we'll go on to that a bit later. Just a reminder of RK Equity, 12 years experience in lithium battery materials. This is a list of our clients. We have done work for everyone on this panel here, so just bear that in mind. Rodney Hooper, my partner, has written some formal research and fair value estimates on three of these companies: Magnum, Frontier, and Talon. I'd encourage you to visit RK Equity's website or Rodney on LinkedIn if you want to pull off those notes. We're going to talk a bit. There's a lot of news about U.S. supply chains under the Biden administration. So he gave a 100-day review published just last week. And following up on that, Congress, 14 Democrats actually in the House published a letter, thanking him for this and essentially saying they're refocusing our nation's priorities to support supply chain security is an area of significant bipartisan agreement. We look forward to working with you on bold action that supports domestic mining and production of raw materials and minerals, essential for the domestic manufacturing, transport, and energy infrastructure. So this is very significant because the U.S. has lagged China and Europe. The policies under Trump, it's just been quite ambiguous, but we now have the full-throated endorsement from the Build Back Better Biden administration. But very importantly, there's bipartisan support for infrastructure development, localized supply chains, and partnership with friendly countries. Why is it not? Okay. One of those friendly countries, I call this Canada America. So this is these are bullet points from that 250-page document. Some people joke that Canada is the 51st state, which I know Canada gets insulted by, but in the document it says Canadian companies and persons are the only non-US entities and persons who are considered a domestic source. And Canada is the second largest import source for strategic and critical minerals, for which the United States has a net import reliance of greater than 50%. Trade in strategic and critical minerals between US and Canada exceeds $76 billion. And they actually reference junior mining in this document. Canada is a global hub for mining project finance, including risk finance that supports junior mining in the strategic and critical minerals space. So we've been talking, Rodney and I, about what we call a North American lithium triangle from Carolina to Quebec to Ontario from a hard rock perspective, but there are other projects throughout Canada and the US. So we think that this is, Canada will play a very significant role, and there are a number of Canadian projects and or Canadian listed companies, in addition to Australian listed companies with U.S. assets that are on this panel that we just think this is a good universe to focus on to play this theme. Within battery materials specifically, Rodney just showed you or tweeted there's a massive surge in cathode production, 140% in China, on a global basis, 70%. It's a perfect storm, of EV sales and inventory bills, and that's translating into a very rapid rise in lithium hydroxide as well as carbonate prices. They're now approaching 16,000, up from 6,000 or 7,000, and he thinks that we might see as high as $20,000 a ton hydroxide in 2021. Also feeding this is Volkswagen has been very vocal. They had a power day a few weeks ago, and then they've done a couple of interviews basically saying, the batteries are the most expensive part and the raw materials are the most expensive part of the batteries, and they need to own and partner in the supply chain. So it's a similar way that we saw Tesla, partner with Piedmont Lithium. I'm surprised it's taken so long to see other auto OEMs partnering, but my eyes very much on Volkswagen to see what they do, and they might do something in Europe, they might do something, you know, in Australia, in Canada, but just be mindful of that, because it could be a significant catalyst overall to the battery material shares. In general, I have a mantra, you know, commodities investing 101, commodities equity follow commodity prices. And so far in the second quarter, we've had, you know, sideways to down. There's a lot of, you know, macro fundamental factors, you know, kind of in play. China has, I guess, released some supply of some materials from stockpiles. There's no stockpiles, you know, of lithium chemicals. But if you look at this chart, this is from 2015 to 2018, early 2018, the last lithium boom. This is just one company, Orocobre. You could see over that 2-year time frame, it was a sharp rise up, but there were often 35 to 40 or even 50% retracements along the way. And that's what we were experiencing in a number of stocks in lithium, in nickel. And we would argue that that is a great opportunity, you know, to buy that dip, in particular if you missed the Q4 2020, Q1 2021 rally. We think the second half is going to be very, very strong for a number of companies in the sector, including members of this panel. We call this higher love. I'm the you know, lithium ion bull, and we have lithium ion rock. So Steve Winwood, a big fan of his, you know, back in the high life again. Higher love. Rodney and I put together our latest video on YouTube. We'd encourage you to watch that, where we cover some of these topics and others. And here's just a disclaimer. Again, we represent a number of these companies, and you know, do your own research. With that, I will stop sharing my screen, and we will start now with Dano Chan, who is the CEO of Magnum Mining and Exploration, which is a Nevada-based advanced developer of a high-grade magnetite iron ore mine that had $24 million invested in it, or $34 million Australian invested in it in the last cycle. And he's going to talk about how he's going to develop a green steel and green iron play for the Western United States. You know, and why don't we take it from there, Dano?
Good. Thank you, Howard. Thank you for having me here. Let's start. I'm not sure how the screen is working out. Our project is in Nevada, United States, and the main theme is to develop a existing iron ore mine into a green steel opportunity in the United States. Now, there's virtually no pig iron or green HBI productivity on the West Coast of the United States, and we are surrounded by over 6 million tons of domestic requirement right out there on the West Coast. Our project is called Buena Vista, and it's been in existence in the early part of 1950. And we're restarting. It used to belong to US Steel for their Geneva Steel operation in Utah. And we're restarting this operation starting from the end of this year, December 2021. We're starting our shipment of a DSO 62% ore using the existing railway and port infrastructure, and export it to China and the Asian market. We have
Dano, could you share your screen, because we're not seeing any of your slides?
Okay, hold on a sec. All right. My apologies. My first time on this panel. Can you guys see it now?
Yes, great.
Okay, good. So the idea is starting with our iron ore operation and move into a green steel, green pig iron HBI production facility rather quickly to support the ever increasing demand for green low emission pig iron and HBI supply for the US domestic steel mills. Our project is out in Nevada, very close to Reno, and we have existing road, railway, and port infrastructure currently available. So we'll be loading onto Union Pacific Railway and take it down to Stockton Port and Richmond Port, from where a Panamax will be loaded and sent out to China starting December this year. The opportunity we see in this project is not only the consistently strong iron ore price that we forecast is going to be continuing into 2022, but it's also the ever increasing price or demand for high quality metallic iron units from the US domestic steel makers. So the idea for us is to start quickly develop an iron ore operation for cash flow, and then work with the steel technology that's currently mature enough, high smelt, into a biomass green operation. Our initial shipment will be a 62% iron product on the coarser DSO and ship it to China. We've already have exclusive contract signed with Anglo American for this purpose. The mine has been developed since 1950 on and off, and by the JORC, it has over 200 million tons of resources, according to the latest JORC 2012 report. We have a great opportunity that can utilize the existing permits. So the mine is fully permitted, not only the mining operation, but also the crushing, beneficiation, even our 68% wet magnetic concentration plant has been fully permitted, even though the base engineering study will be completed by October. So we're shovel ready. Basically, we can start exporting by tomorrow. All the big contracts with the logistics partners, Union Pacific, the ports in California are all in place as we speak. We're, I think, just facing some of the best time right now, because coal exports out of United States, especially out of California, are being scrutinized. I think that's the right word for it. California don't want the ports to start keep exporting coal in 2023. So we are seeing a lot of coal exporters are reluctant to sign big contracts with the railway and with the port to maintain their status. Hence, our iron ore exports are going to be replacing a major portion of the coal exports that's going to be left behind. And hence, you're looking at cooperation from the railway, the port, and also availability of contractors and relevant train assets. We're looking at timely opportunity for a major rebound or major requirement for steel products, especially in the United States. Not to mention the requirement for greenhouse emission compliance coming up, but also you're looking at major infrastructure projects where it's in the pipeline or it's currently ongoing. We believe the requirement for steel, especially in the US domestic market, is going to remain quite strong coming up. If you look at their requirement for import of pig iron from Russia or from Brazil, the price has gone up to somewhere around $750 delivered or $800 delivered to the steel mill, and that requirement is not subsiding. One of the best opportunities we're seeing is the United States steel mills are stepping away from the blast furnace operations, led by Nucor, and the rest of the other steel mills are turning themselves into electric arc furnace producers. Hence, they need to use large quantities of scrap and even more quantities of pure metallic units, whether that's HBI or pig iron, to make sure that quality of their steel products is going to be on the premium side and they can maximize their return. We are looking into a green biomass operation for our steel products, and we believe by adding value of our iron ore right in where the United States and where the heart of the supply is, will give us the maximum return. In doing that, we cannot go back to an old way of making pig iron or HBI with a huge greenhouse emission. And to do that, we're betting on a biomass called juniper tree. This is a high energy biomass, and it's a juniper tree itself is an invasive species. It's gone from a southern part of Oregon all the way down to Arizona, California, Nevada, and Colorado. This tree sucks up around 40 gallons of water a day and kills all the native plants around it. And because it belongs to the pine tree family, the energy that it burns is intense. When we make it into a biochar, it creates an energy value north of 8,000 kilocalories per kilogram. And that will be an ideal fuel to replace the coal that's going to be used in the high smelt system or any other reduction system for pig iron. We are currently working with our vendors to identify the volume of biomass will be available to us. And according to the latest studies and the latest survey, we have over 3 million tons of biomass, juniper tree biomass, available a year to us just out of Nevada. So the idea is we're trying to make the iron ore, iron ore 62% by the end of this year, shipping to our buyer in China, and gradually move it to a 68% super premium iron ore magnetite concentrate, which is going to be one of the best quality in the world, but with a Pacific Ocean freight comparable to Australia. And in very short time, maybe 24 months time, we'll be moving into a biomass, high smelt, green pig iron and HBI supplier for the West Coast of the United States, and not only for the, also for our potential buyers from Japan and Korea. So this is the plan for our operation is DSO shipment starting from December and concentrate starting from end of next year. And the biomass high smelt operation will be starting in the Q1, Q2 2023 as we speak.
That's great. Dano, thanks. Rodney will ask a quick question. And again, I'd encourage all viewers, feel free to go to our website and you could download a teaser documentation which fully summarizes what you heard from Dano today. But Rodney, why don't you quickly ask one question and we'll move on to Talon.
Sure. Obviously, Dano, the HBI and pig iron opportunity is phenomenal in terms of an IRR perspective, but just near-term cash flows, just give a little color to the listeners and put some numbers to the reality of how low the capex and capital investment is to kick off the initial production into the 62% DSO.
Thank you. Our plan for the dry crushing and dry magnetic separation to start off our 62% DSO will be within $15 million US, and we are fully funded for that portion of the operation. And our agreement with Anglo American is not only they will help us to start the operation, they will also be funding our stockpile at the loading port in the United States. So we have pretty well funded operation, and we have very well funded operation costs going forward. We are looking at probably one of the lowest cost producer to supply into China coming up.
And just another quick one. roughly looking at the costing on with HBI, if you look at the fact that China has now lifted a ban on imports on scrap, the HBI price is a lot more stable in the US. Is it fair to say your operating costs would be roughly only half what's been the sort of historic price in the last while?
Oh, absolutely. I think the advantage is you got to have your own raw material to capture that increase. Our raw material out of Nevada is a very easily upgraded magnetic product. So our cost of operation is actually very significantly cheaper than rest of the other competitors out there. We are very well connected by logistics, trains, highway, as you can see that we're north of Reno and very well accessible to all the highway systems out there. So we're looking at least very, very less than half of what the current price of HBI is being sold as our production cost going forward. Hence, getting a low cost, low emission, high quality steel metallic product for the US domestic steel making suppliers will be our top priority in carrying this company forward.
Okay, great. Thanks, Dano.
Okay, thank you.
Thanks a lot, Dano. It's a great introduction, and yeah, it's a brand new story. And you know, hope we'll just watch. I think it's about a 75 million, you know, Aussie market cap, ticker symbol MGU in Australia, and they are. I think they've applied and should soon have an OTC listing in the next kind of couple of weeks, so North American investors could more easily trade the stock. With that, we're going to move on to Talon Metals, who has been at Mines and Money a number of times, and no problem in trading this stock in Canada or on the OTC, ticker symbol TLO in Canada, TLOFF in the US. Class 1 nickel was highlighted in that US supply chain document as an area of high concern. And they also noted that there's not very much available in the United States. And they also mentioned that sulfides deposits are the most, the best deposits to get Class 1 nickel. So we've talked about secure, scarce supply, you know, of nickel. We've called Talon Nirvana nickel, as like Nirvana lithium, you know, as it's based in Minnesota. And I'll leave Sean to update us on all the fantastic drill holes that they've had, you know, in the last quarter. But the tailwind, I think, of the U.S. government's recognition about Class 1 nickel and sulfides, and that none exist in the U.S., it has not yet been fully appreciated in the you know, week since they've published that document.
Thanks, Howard. And everyone can see my slides okay?
Yes.
Okay, great. Good morning, good afternoon, good evening to everybody. So look, just to give a bit of background on the project. So we are currently, Talon Metals Corp is traded on the TSX on the main board. Trading symbol is TLO. In terms of the location of the project, just to orient everyone, as Howard mentioned, we are located in Minnesota, really ideal location. We're about 45 minutes down the road from the port in Duluth, so we have access to all of the port installations. We also have a railway that runs directly through the project called the BNSF Railway. So whether we wanted to ship our product within the United States, whether it was going to go to Canada or elsewhere, world is really our oyster. Power, water, roads, it's all ideal in terms of where we are. A lot of words on this page. I don't want anyone to really focus on it. There's really just one point that I want to highlight for everyone, which I think is the major differentiator of our project. Currently within the United States, there is only one operating nickel mine. It's called the Eagle Mine. It's owned by Lundin Mining. It's in the state of Michigan, and it will be mined out in 2025. We are expected to come on stream in 2026. And so at that point, we will be literally the only operating nickel mine within the United States. And where that has become very key and strategic, I mean, again, all the evidence was over the last couple of weeks with all of the wonderful announcements out of US government, the various administrations, whether it be Department of Energy, Department of Defense, or from the Biden administration themselves. I mean, one of the key points that was made was that nickel is a really important aspect to the cathode portion of the battery, and the US does not know where they're going to get their source of nickel from. And given that we are the only source of nickel within the United States, we think it just puts us right place, right time for what is happening. And I'd also like to point out that they did identify that the most critical time for need of nickel is really in that 2025 to 2030 timeframe, again, when we will be on stream already. Another really key thing about the project that I want to mention is who our partner is. It's basically a 60-40 joint venture agreement with Rio Tinto, one of the largest mining companies on the planet. Our group has the right to earn into a 60% interest, and we are currently the operators of the project. On the left, I have the deal structure, but all to say we are very actively earning in and expect to announce our first 51% interest in the project, hopefully in the coming weeks. And then we will be well on our way to 60%, which we hope to accelerate and maybe even be done by, if not late next year, then the following year. One of the key advantages to having Rio as our partner is not only do we have access to their various departments, but they allowed us as part of this project to actually handpick who from their team stays with the project. So we have incredible support from them. Our current head of exploration has been on the project for 15 years and has now joined us on a full-time basis. He was a Rio Tinto employee, head of environmental, government relations, community relations. Those are all Rio Tinto personnel that have maintained continuity and have stayed with the project and are now part of our team. So I like to say that we have the bench strength of a major mining company, but we still get to be as nimble as a junior, as we obviously adhere to the same stringent environmental policies as did Rio Tinto when they were the operator. On the right-hand side here, you're looking at our humongous land package. It's an 18-kilometer intrusive complex. We own the whole thing. That little sliver that's marked the Tamarack Resource, so that's our, what today, at least what we've announced so far, is 11 million tons at really high-grade nickel copper. One of the key aspects of the project from a permitting standpoint is that we are 100% on state and private land only. There are no federal lands at Tamarack. For all intents and purposes, that means that the lead agency for the purpose of permitting will be the Minnesota Department of Natural Resources, which is the state. I had mentioned our 11 million ton combined inferred and indicated resource. This just breaks it out for you. Look, the key takeaway is the average global grade for underground nickel mines at the moment sits at around 1% nickel. And as you can see, our average nickel equivalent, that's the nickel and the copper grade together, is sitting at over 2%. So it is overall just a really high grade project, low cost, easy recoverable, easy metallurgy. So a really ideal project. So on this slide, I really just want everyone to focus on beyond 11 million tons, what else is there? And, we have a lot of, what I would call, some people call it smoke. I'll refer to it as actual evidence of the fact that we believe we're underway to the beginning of a future nickel district, not just the first nickel mine. And what you can see on this slide is if you look at the top, that top dot called the 264 zone, that's a whole 3 kilometers north of our resource area where we've hit nearly 10% nickel, some of the highest grades on the project today. And look at those copper grades, 5.7% copper. And then you can go all the way almost 4 kilometers to the south of our resource area. And you can see there, we've hit 2.5% nickel and over 4% copper. So we've hit everywhere along the complex. We're just methodically working our way through it with the goal of really putting the first area that we've identified into production. We're in the midst of growing it somewhat, but again, being in production by 2026. Now, this is a really busy slide that I won't go through. The point of this slide really is this represents the drilling that Howard mentioned we've been doing over the last 3 months. It is about 300 meters outside, north of our resource area. So this is not included in our resource. It's not included in any of our economics today. And all of those red dots, those are intersections of high-grade nickel copper mineralization. So you can see that we are proving that the area to the north, this is on the western side. Here you see on the eastern side some more of the red dots. You can see that we're very quickly proving that there's a lot more shallow, high-grade mineralization that runs to the north of our resource, which will ultimately grow it, and we will bring it into our economics, hopefully with an updated technical report, if not by the end of this year, then Q1 next year. And one of the really exciting things is about a week ago, we announced that we hit not only 13 meters of massive sulfides to the north outside of our resource area, but then followed that up with another 9 meters. So we know that there's something very special going on there. Very quickly, just in terms of downstream. So we have put out a PEA, we put it out in February. We identified that basically we have all the optionality in the world. On the right-hand side, you see us producing for the traditional, effectively stainless steel market, where we would sell to the smelters in Canada. That has really been the traditional approach. And then the two other scenarios in the middle and on the left, those are both for the battery market, that is keeping the product in the United States for a domestic supply chain. Middle scenario is us going to a nickel sulfate, which is quite popular amongst the market today. And then on the far left, we have the nickel powder scenario, which really was made popular last year at Battery Day by Tesla, which is just a more refined, more pure form of nickel that will ultimately allow the battery to go further. And we are undergoing some test work on that with planned results over the next 2 to 3 months, but all looking good so far. And then in terms of economics, again, without walking through the details, the point is it doesn't matter which way we go. Because we're high grade, low cost, any scenario, the NPV is strong, the IRRs are excellent, our cash cost is at the lowest end of the curve. And as I mentioned, all those red dots, everything you saw to the north of our resource area, all that additional mineralization, none of that has been included in our economics yet, or in the ultimate size of the deposit. So there's definitely lots more to come. Huge focus for us, obviously being within the US and with the global push for ESG type initiatives. With our rocks, we really do have the ability to produce green nickel. So just on the left-hand side, kind of a laundry list of the things that we're focusing on. You know, we're gonna be a very small footprint underground mine. We are not proposing to have a tailings dam at Tamarack, but rather a form of dry stack. And we are undergoing currently a lot of work in the background on carbon capture and storage. And we believe that we will be able to not only be a carbon neutral project, but we believe that we will be able to show a pathway towards being the first carbon negative project, given the nature of our rocks at Tamarack. And really that's the story. I mean, in terms of where we sit now, we're well cashed up. We've got about $38 million Canadian in the treasury now. This year is all about drilling, growing the resource, figuring out what our mine plan is going to look like, and ultimately figuring out what product we're going to produce. So it is a very big year for us, very active, lots of news flow, and look, just a really exciting time to be in the nickel market, especially with the recent news out of the US. Thank you.
Rodney, I think we're a little bit short on time, so we're going to move on to Chris Evans of Winsome. If we have time to circle back, we will. But I just want to flag again, Rodney's written a research note on Talon. It's on our website. It was done around the time of the PEA. Since then, they have grown the resource substantially. So there should be, considered potential upside from that. And Talon recently raised financing at 60 cents. The stock yesterday was trading at 53 cents. So after having traded as high as 80 8 cents. So what the higher love we're kind of talking about for lithium also applies, we think, for nickel, and would encourage you to check that out. So with that, I'm going to introduce Chris Evans. This company is not yet public. Chris Evans used to be the chief operating officer at Altura Mining, which is where I met him. He then became part of the Goulamina mine at what is now Firefinch for a period of time, but he's now working on a Quebec project exploration story that's being spun out of a company called Metals Tech, and they announced a deal a couple of weeks ago where Lithium Royalty Corporation, a royalty provider, is, I guess, anchoring the IPO, which is expected to be at the end of August. But I'll let you, Chris, kind of describe that, and quickly, if you have some slides, just go through, you know, the exploration potential and what you're expecting to do as the managing director of this Winsome Resources. Chris, you look frozen. All right. All right, I'm going to ping. I don't think he recognizes that he's frozen.
Sorry, am I back now, Howard?
Yeah, you're back. You're back. Okay, great. Thank you.
Apologies for that. My internet perhaps dropped. I do have some slides which I'll share. Thank you very much for having. As Howard pointed out, it's quite early for Winsome Resources to be presenting in terms of investment opportunity because we're not yet listed. However, we do have quite a lot of history of exploration in Quebec. We're a spin out from an existing ASX listed company called Metals Tech, as Howard said, and we're currently going through the IPO process. We expect to be listed in September this year. We have 3 projects, one of which is advanced exploration stage in the James Bay region of Quebec. There's 20,000 hectares of land over the 3 projects, and they're 100% owned by Winsome Resources. Canset is the most advanced, and at Canset, between 2016 and 2018, there's been about 59 diamond drill holes for about 5,500 meters of drilling. There's almost a resource there, but it didn't quite happen due to winter season, various other factors. But the Canset project is quite incredible in terms of its grade and the way the ore presents. So from surface at parts of Canset, we've experienced 18 meters of 3.2% lithium oxide, which really is a world-class type of grade. And not only is the grade high, but it's a very coarse grain spodumene. So this is very similar to what we have seen at the old Bald Hill, which is in Western Australia, mine, which makes the ore very amenable to DMS only. So dense media separation is a very simple gravity process and it's low impact. And I think this is the key to our projects here in Quebec, is that we are going to be a low impact, low capital cost, low operating cost mine that'll be very quick to get into operation. With 99.8% of Quebec's power by hydropower, I think we are in the perfect position to be able to produce a very low impact lithium product. Roughly speaking, our timeline, our prospectus will be lodged in July, our offer will open in August, and then our ASX listing should commence in September this year. and already we're seeing strategic investment. So the Lithium Royalty Corporation is a Canada-based company that's backed by Waratah Capital and Riverstone Holdings. They've invested 6 million Australian dollars for a 3% royalty over our lithium, and they're cornerstoning our IPO for 3 million Australian dollars. They're going to offer a board seat and give us some real advocacy and influence in North America, and particularly in Canada, where our projects are. That probably covers most of it, Howard, if we're behind. But I can continue if there's more time available.
Yeah. How are we doing from time, Minds and Money people? Do we have time for a question?
Perhaps no one on.
They're on mute.
Chris, so just let me understand here. You've fantastic. You know, DMS is really the gold standard if you can do it in terms of cost and processing. You've done some test work here, metallurgical test work.
Yes, metallurgical test work was done on a representative sample of drill cores taken over a number of drilling campaigns, and from average grades of 1.5 to 2%, a 6% concentrate was produced, no problems, and that's essentially on an unoptimized flow sheet, which leads us to believe that we can start this in an incremental manner. So the amount of drilling that's been done at the moment is enough to, in theory, produce a JORC resource, which hasn't formally been wrapped around it yet. But with a few million tonnes and we're starting with one DMS module effectively. There's 3 or 4 years of operation producing, you know, in the region of 50 to 100,000 tonnes per annum of a 6% concentrate, and then we can ramp up as our exploration increases.
So in other words, near term, you can be to market quickly then.
That's right. Very near term, because it's an understood technology. And when I say near term, for an advanced exploration, I see us only as one drill season, and then a short while later, we could be in production.
Yeah, I mean, if we look at past producers in Oz, Tawana, and so on, in the old days, they were up and running very quickly. So I think they were up and running in about 8 months, if I remember correctly. So that's very promising. And I see there, you know, you're reaching these sort of recoveries that are very coarse materials. So you're going to be on the low end of costing.
I really think so, yeah. And with recent EU legislation, although the EU won't be our target market, but I think the US and North America in general will follow legislation on labelling batteries, the carbon footprint, and then specific carbon targets. Producing in Canada, supplying into either North America or Europe will very much be our story.
And your transport route into the US?
We sit directly on a major highway for the CanSet project. So we're directly connected by road. And in addition to that, there's a major Quebec hydro power line passing directly through our tenement. So again, we can connect to mains power relatively easily, which again lowers our time for production and our footprint.
Excellent. Thanks, Chris.
Yeah, so look, again, Rodney and I have been very focused on, again, we call it the North American Lithium Triangle, big supporters of Rockin' in the Free World, Neil Young in Quebec. And we have Critical Elements coming up after Trevor Walker from Frontier Lithium on the next panel, who could speak about you know, the vast, the quality, you know, of the resources and the exploration upside and potential. We think Canada in general is underexplored. We are what we call in lithium 3.0. Winsome is a bit of a lithium 4.0 story, you know, in that it is, it's a news story in Lithium 3.0 that has had some promising work done, but with the capital that they raised in the IPO, expected to be anywhere between 12 to 18 million, I think is the target. They'll be well cashed up for a very aggressive drill program. And if you saw on that map, I think they're just north of Critical Elements and the Rose project. So I think you're going to see a lot of news flow coming out of Canada hard rock deposits. And we've also observed, Rodney and I, a Canadian discount. Canadian projects in general are trading, especially hard rock ones, at meaningful discounts to, let's say, Argentina brines or DLE stories. And we think that even within this retracement we're seeing, before higher highs, we think on a relative value basis, in addition to an absolute value basis, there's significant upside potential, in the Canadian stories. And I'm not sure what the valuation. Do you have any indication what the valuation is going to be of your IPO, Chris?
Yeah, so we expect the EV to be 9 million Australian dollars.
9 million Australian dollars. Okay, so that's really a ground floor kind of valuation for, a drill program that, hopefully will have a resource and a scoping study by the end of the year. Is that right?
That's the aim, yeah.
Okay. All right. That's great. So just anyone, if you're interested in Winsome, Metals Tech is public. You could buy that stock. But if you have any questions or interest, you could reach out to Chris, or feel free to reach out to Rodney and me as a conduit, to convey information about, the IPO. And with that, I think that'll wrap up the first panel. We ended on a lithium, in the non-lithium panel, but thank you for the, filling in as a late addition, Chris. And now we'll transition to the full lithium panel with some of your, compatriots in Quebec and Ontario, as well as a clay opportunity in in Oregon, with Jindalee Resources. So with that, the Minds and Money, we're going to take a short break before we transition. Okay, so Trevor Walker, I think you were on the last panel in March at Minds and Money. And since then, you have had, I think maybe you've raised some capital, you bought back a royalty, and then you put out like an absolutely spectacular drill hole, which I think Rodney thinks that, you're the green bushes of Ontario, or the green bushes of Canada, or North America, even with those grades. So why don't you just update us, who is Frontier, and who are you, and what's the path? Where are you, and what can we expect in the next 6 or 12 months?
Great. I know we'll be conscious of time here, so I'll throw up a few slides anyways to help me keep on topic. Howard, to see the presentation?
Yes, we could see you.
Okay, great.
We could see the pres. Yeah.
Wonderful. Okay, well, thanks for that lovely introduction. Really excited to be here and have the opportunity to present. I suspect a few shareholders are listening, and I'm really happy to share the story with those that aren't familiar. Frontier has really been all about building substance before telling the story. So we're really excited about the prospect of the near medium-term future for the company. So again, my name's Trevor Walker. I'm president and CEO of Frontier Lithium. Frontier Lithium is a TSX Venture and OTCQX listed company that's developing a 100% owned PAC lithium project located in northwestern Ontario. The company is focused on leveraging North America's highest grade and lithium resource of becoming a fully integrated producer of lithium chemicals, obviously driven here by a large part of the technology being applied to electric vehicles. just forewarn some forward-looking statements during my brief presentation here. So the company has had a rare metal focus since 2010. Roughly, I joined the company late 2009, early 2010. There's really very few assets globally that that we believe that we can compare ourselves to. Howard, you made a great reference to the prolific Greenbushes deposits from southwestern Australia, which really supplies, I think, virtually around 40% of the world's lithium needs. It's the mother of all hard rock lithium deposits in the world. So it's our asset. It has some anomalous features to the Greenbushes deposit. High quality. Our assets has the ability to produce what's referred to as technical grade concentrates. So those concentrates are used by the world's premium glass makers. So the best glass in the world is actually lithiated. So ironically, for those who aren't aware, there's actually more, if you carry an Apple or Samsung phone with you, that Gorilla Glass actually, that glass contains more lithium in the glass than in the actual battery. So there's very, very few assets around the world that can produce these technical grades. So it's real testament to the high quality aspect of our resource. So we, as we grow our tonnage and our resource size, we view our material that would be absolute premium feedstock for future conversion and production of lithium chemicals. We've got a great location proximate to obviously the northern extent of the Ottawa Alley and in the United States, and extends well into southern Ontario. So really prime location to not only great resources, but downstream the best market in the world. So we recently put out a preliminary economic assessment about 3 or 4 months ago now. It's essentially $1 billion project, and it's got a 26-year project life. We're really conservative by nature here at Frontier, so we see lots of room for improvement as we now advance our pre-feasibility study, which we plan to have completed within the next 12 months. Ontario is a great location. I'm actually run our head office here out of Sudbury, Ontario, a prolific nickel camp for North America. So great access to world-class expertise from exploration, mining, and mineral processing and downstream chemical processing and know-how. Skins in the game. So management directors have close to 30% interest in the company. The company is ranged from 150 to $200 million market cap on the TSX Venture. So the stock is tightly held. We have, as Howard mentioned, done about a $12 million raise recently, and we're fully funded through to completion of PFS and all the programs and work required to make that happen in a short period of time. We won't talk too much about the market. Howard did a great introduction. I think the main point here is you're seeing 35 to 45% year-on-year growth recently. The upside and the potential of this market is just massive. We see 3-time growth in the next 5 years, and obviously this is driven by batteries is the key technology for a first step globally by jurisdictions to really key in on trying to get to pre-industrial revolution levels of CO2 and greenhouse gases emissions globally. So really what's required here is new sustainable producers are required for this market right in front of us. So a great opportunity. much of the focus for the company is really centered around the highest energy dense batteries that are required for North Americans, in particular, a key focus for us. In order for the high nickel cathode materials for the best batteries, lithium hydroxide is a requirement to be coupled in the active materials of that battery. So there's a clear cost advantage for producing lithium hydroxide directly from a hard rock source, spodumene in particular, such as what we have on our project. Really around $1,500 a ton advantage. So that's a main driver for us and a key on much of the works being centered around the production of lithium hydroxide in the lab and in the future commercially. We have a rich history in mining here at the company. At Frontier, and one thing we'd like to leave the audience and viewers with is we can't ignore really what has been where success lies in the mining space, and that is grade. Grade is king in mining, and I'd like to highlight that in our resource we have 4 discoveries. 2 of which are deposits, and they both are the 2 highest grade deposits, so the highest concentration of lithium in North America. And those 2 deposits lie approximately 2.3 kilometers from each other. Where grade is king, we here at Frontier like to talk about the queen, and the queen are widths. The widths of an ore body. Widths, are directly correlated with where you'd see a stripping ratio in feasibility studies. So our stripping ratio is about 3.6 tons of waste to 1 ton of ore. So it's one of the lowest as well in North America. So that combination of grade and widths are really speak volumes to the low potential for dilution of deleterious material when you're mining, is really what's going to pay in this market, and what does pay in the chemical space is quality. So this really is the right recipe to ensure that quality chemicals can be produced. So we view ourselves as the newcomer with the potential to be in the high end of the low end of cost and the high end of quality in the future. Some highlights on the PEA, we'll try and wrap up here with a few slides, is really 2 open pits within 2 kilometers. So the fully integrated plan is building a mine, a mill, and a downstream chemical plant situated somewhere in the Great Lakes region. Northern Ontario, on the north side of Lake Superior, is really a prime location that we looked at for the PEA. But we're in excess of post-tax IRR of 20%. We see a lot of room for improvement on our numbers. So we'll continue as again we advance our PFS within the next 12 months in completion. Both those deposits, like to add, are still what we call open in all directions. So they're still larger, so the upside and potential is really huge on our project. Jurisdictions around the world are really focused on facilitating rare metal assets, and really looking at trying to build the races going on around the world for areas to try and build the entire value chain. Our advice is very simple to our partner here, the province of Ontario, that you really need to start with what you have. And we're blessed here in Ontario with really high quality rare metals in Northern Ontario, right through to outside of Michigan, being a very large manufacturing hub in the south for the auto OEM. So it's really important that, and government here has identified that Frontier is really at the convergence of 4 main government policies and guidelines in place from the province, and that is building the critical mineral strategy, which we belong to the mineral that task force, work very closely with the Ministry here of Northern Development and Mines as well on developing and connecting local or Northern Indigenous communities, 4 of which are partnered with Frontier Lithium. As you can see, we're located in the north, just at the tip of what's defined as the far north in Ontario. So the infrastructure is suitable, as outlined in the PEA, to build such a vertically integrated company. We're working very close with our government to work on the heels of a high voltage transmission line to connecting the communities in the Northwest onto the grid, and also build out infrastructure such as all-season road access. So it's really integral to make sure that we work close with the communities and governments and take advantage of this great opportunity to the benefits of North America, and in particular the northern communities, our partners. 2 assets, about 30 million tons between the 2 deposits, the PAC and Spark. PAC's 2.04%. I'd like to highlight really low iron is a key proxy for impurities in the lattice of the mineral called spodumene. Ours is right there in the lowest in the world, comparable again to the Greenbushes, less than 0.1% iron oxide in that PAC deposit. The Spark is about double the size, about 20 million tons. The iron levels on half of it are about double, the other half comparable to the PAC. But referencing that Howard's latest hole, we're actually conducting the infill drilling right now on the Spark deposit, a requirement for the advancing PFS. And we drilled what we believe, or what we, based on our knowledge, is the best intersection ever drilled, bearing high-grade lithium. So that was 340-meter intersection of 1.7% lithium oxide. Just astounding. We will be delivering more results in the near future. And again, infill drilling is ongoing on the project right now.
Trevor, just if we could jump in there, I think we're getting tight pressed. If you could just give a quick overview to the relationship with the Glencore subsidiary on producing concentrates.
So right now, the company is performing an internal scoping study assessing various process options to produce lithium chemicals. They can be defined as both a traditional sulfate route and also alkaline route. So to work backwards here, that alkaline route, we've actually got some concentrate that's being sent to a third party for that initial bench scale assessment right now. You're right, Ronnie, we're actually partnered with a subsidiary of Glencore called XPS that operates out of Falconbridge, Ontario, just in the greater Sudbury area. Very well-known group, world-class facility. One of the process options is that process that is near completion at a mini pilot stage. We've produced solutions that are really undergoing final purification right now and final crystallization. So that's one of the options that we are conducting. And also some other slight variations around the conventional, what many would refer to as Chinese conventional flow sheet to produce lithium chemicals. You know, what's really important here is to partner or work with groups and attract experts that have really great knowledge and experience. In particular, you know, we've added a recent VP of technology, Dr. Nigel Cao. He actually spent close to 10 years as chief scientist for TNT out of China, one of the largest lithium producers out of China. So what's really, and he lives in Montreal, Chinese Canadian. It's just what's really critical here is to make sure that we get this right. It's really important for us in the coming months to make the right process backed up by technology that's proven and tested, so that we can come into the market and deliver. So
Trevor, thank you. I'm sorry to cut you off. Just in the interest of time, look, all the listeners, we're scheduled to stop at 11:20, but Minds and Money has told us we can go over to 11:45. So thank you, Trevor. We're going to move on to Eric Zaunscherb of Critical Elements, which is in Quebec. If you're interested more about Frontier, again, Rodney's written some research on it. You could look at that. But Eric, since you've last been on, I think you had some coverage initiation from Cantor Fitzgerald. Critical Elements has appointed Cantor as their financial advisor. You're very close to getting permitted, as far as we understand. And talking about higher love, Critical Elements was one of the ones that actually did hit a 52-week high about a week or two ago, before pulling in a little bit, and close to an all-time high. So there's messages in the equity markets, in my opinion. Sometimes things could be oversold, overbought, but companies that are hitting higher highs on positive news flow are potentially a good indication of momentum to the story. So with that, I'll let you, Eric, give the update on Critical Elements.
Thank you very much. And I'm not sure, can you see my my presentation well enough?
Yes.
Okay, super. Well, moving on then. First, thank you to ARC Equity and Minds and Money for hosting this event in the first place and inviting Critical Elements to participate. So moving on. It's our vision to be a large, responsible supplier of lithium to the flourishing e-mobility and renewable energy industries. We are well positioned to achieve this vision because, one, our wholly owned Rose Lithium Tantalum deposit in USG, Quebec, is one of the purest undeveloped lithium deposits globally. Two, Advantage Quebec. The province is extremely well located to service the North American and European markets with strong human and financial capital, as well as extensive infrastructure. Three, we're blessed with a strong cooperation with the Cree Nation of East Maine, the Grand Council of the Crees, the USG, and the Cree Nation government. That's been formalized through the Piquetau Agreement signed in July 2019. Four, catalysts. The next year should be ripe with catalysts, which I'll touch upon as we go along here. This is a quick snapshot of our capital structure, research, coverage, and trading. We've got a very loyal retail base in Quebec and a growing international institutional registry. At the end of the February quarter, we had over 10 million in working capital, which is sufficient to deliver on our business plan over the next 6 to 12 months. 5 investment highlights, some of which we've already touched on. 1, we do expect the Rose project to be fully integrated, delivering high quality lithium hydroxide to the market. Quebec was recently ranked 6th of 77 jurisdictions globally in terms of investment attractiveness in the 2020 independent Fraser Institute survey of mining companies. 3, this is a management team that's been there and done that. 4, optionality preserved. The conclusion of the permitting process in Q3 should be an important milestone as potential strategic partnerships that have been discussed over the last few years bear fruit. And finally, potential catalysts. Aside from permitting and financing, the market valuation of Critical Elements is focused on phase 1, mine and concentrator. As we deliver technical studies on phase 2, the fully integrated chemical conversion, that incremental value should become apparent. I mentioned management that's been there and done that. Until January 2015, when it was sold to Albemarle for $6.2 billion US, Rockwood Lithium was the largest producer of lithium globally. Rockwood Lithium was run by Dr. Stefan Haber and Marcus Brune, now Critical Elements Lithium's president and VP Finance, respectively. These people clearly know the lithium business. Our CEO, Jean-Sébastien Lavallée, is a geologist hailing from a multi-generational mining industry family. He's experienced in project discovery and advancement and well regarded in the mining community in Quebec. Management's well supported by a strong technical and financial team in management and on the board. It was their considered and conservative approach in the first place that appealed me in joining the board. Here one can see the Rose project location up here in northern Quebec, Iuiski, land of the Cree peoples. Now, at first you might think that's not particularly well serviced by infrastructure, but zooming in here, you can see that the project is located directly beside an all-service road, directly underneath an existing power line, kilometers from a community in the Mesca and an airport. Infrastructure is excellent. Recently, we've optioned some small non-core positions of the extensive land portfolio, over 700 square kilometers, to third parties. Recently, we've artificial intelligence and machine learning to mineral exploration. There's a great deal of exploration potential within these lands that may be catalyzed through exploration. Moving on, we're immensely proud of our relationships with the governments of Quebec and the Cree Nations. We're very excited by the opportunity to have a positive impact in our community in terms of education and employment. Our location imparts natural competitive advantages in delivering clean lithium to the market as consumers seek to decarbonize going forward. Our recent appointment of Andrew Baribeau, an experienced and well-regarded Cree negotiator and administrator, as advisor to critical elements, is an exciting development. We're also proud of our recent accreditation as UL 2723 Eco-Logo certified for mineral exploration companies, part of our journey to be the best we can be from an environmental, social, and governance perspective and contribute positively to the decarbonization movement. We intend to advance the Rose project with a conservative approach using standard, proven technology. Phase 1 delivers a spodumene mine and concentrator, producing high-value technical-grade spodumene for the glass and ceramic industries and high-purity chemical-grade spodumene concentrate for conversion. On June 7th, we announced the retainer of Metso Outotec and WSP Canada to deliver engineering studies for the integrated lithium hydroxide plant. Phase 2 will convert concentrate from Rose, as well as potentially others, to deliver high-quality lithium hydroxide monohydrate for the manufacture of high-end lithium-ion batteries. Again, all standard technology, no black boxes. Now, zooming in slightly, Rose ore is low in iron oxide and low in mica, two important impurities that are currently found in a lot of ores and concentrates going forward. So we're producing spodumene concentrate at a very high recovery rate and resulting in very low iron ore content, iron oxide content. And you can see our friends at Frontier Lithium, their PAC deposit, has also excellent low iron content. Moving on, the 2017 Phase 1 feasibility study demonstrated a robust project delivering strong EBITDA over a 17-year life, and that's not limited by the deposit, but rather the amount of drilling, and a robust 35% after-tax IRR. Feasibility study results and the metallurgical studies on bulk sampling to support them show excellent recovery rates for both technical grade and chemical grade spodumene concentrate. The tantalum is a nice byproduct for the steel industry and capacitors in the electronics industry, a nice valuable byproduct for the project. As I mentioned, the Rose project looks robust, and looking at the costs, you can see is from a US dollar perspective, sub 350, which definitely puts it in the good half on the concentrate side, especially as concentrate prices are now rising up through $600 and $700 per ton. Phase 2 is all about converting our spodumene concentrate into the highest quality lithium hydroxide monohydrate used in the manufacture for the cathodes for those high quality batteries. Pilot work on the rose concentrate has already demonstrated a recovery rate of 93% in thermal leaching, which gives us an overall lithium recovery rate from ore to lithium hydroxide monohydrate of over 80% versus the industry benchmark of around 65%. New pilot work by Metso Outotec is about to begin and will focus on giving us new data points to reduce startup risk and aid in vendor selection. So overall, putting it all together, bottom line, Critical Elements intends to develop the ROSE project as a fully vertically integrated producer of low-cost, superior battery-grade lithium hydroxide monohydrate. The ROSE project's high purity provides a natural advantage in recovery cost and market appeal without relying on elaborate or new technologies. Personally, I'm excited to watch this management team with long, proven experience in the lithium industry working in partnership with established engineering companies to make ROSE a reality. Thanks very much.
Thanks, Eric. Just a couple of quick questions. Recently, you were advancing and expecting full permitting. That's gone quiet. Is that what are the expectations on that front?
That's a great question. We were looking to see permitting earlier this year. We are, however, very grateful to the members at the federal and provincial level committees responsible for evaluating the permitting process and making recommendations to ministers. But you have to recognize that they've been working hard through the pandemic to complete this process. And an essential component to that process is public consultation, in particular with the local communities. And that's an absolutely essential component, something that I'm afraid some people might underestimate how long that takes and how extensive that process is. In order to complete it properly, time has to be taken. And naturally, the pandemic has made that consultation process more difficult. And we're understanding of that reality. We hope that with that public consultation process now complete, that we're going to see the completion of the permitting process with full authorization to reach a conclusion over the near term.
Okay, great. Thanks very much, Eric. Howard?
Yeah, great. Thank you. And our final panelist is Lindsay Dudfield of Jindalee Resources, an ASX listed company with an Oregon asset, which is very similar to Lithium America's Thacker Pass. And in fact, you put out a resource statement, which actually says that you're bigger than Thacker Pass. Is that true, Lindsay?
Yes, that is true on contained lithium carbonate equivalent, Howard. Some people were a bit surprised because I guess we've been a pretty low profile company, just working quietly away, but we were able to, we've got fantastic continuity in the deposit, and it allowed us to put out a resource that was probably a lot bigger than what most people were thinking. And also we're also able to demonstrate we could beneficiate the ore and use a lower cutoff grade than we had previously, and that also helped catapult the resource up to currently being the largest lithium resource in the US on contained lithium carbonate equivalent. Yeah,
that's great. Do you have slides, Lindsay?
I do.
You do. Okay, so let's walk through those a little bit. But as a further intro, you announced that resource. You raised 9 million Aussie, I think, on the back of that, and now you're preparing to have a scoping study, I believe, almost imminently. Is that correct? Yes,
that's correct. And then launching into a very big drill program in the commencing in the September quarter, towards the end of the September quarter of this year. So yeah, look, I'll just share my screen here with you. Where are we? Here we go. So you can see that okay?
Yep.
Yep, excellent. All right, I'm mindful of time, so some of these slides I'll
put it on full screen.
Full screen, sure, view. Okay, all right. Okay, so this cover photo is our drilling program at the Mcdermott Lithium project, our flagship project at the end of last year. You can see very flat sagebush country. So just the corporate slide. For an ASX listed company, and we've been listed since 2002, we've got a very tight capital structure. Just over 53 million shares on issue. The share price was about 10 days ago. We're now around 240. That gives us a market cap of around 129 million Aussie, or about 96 million American dollars. So not challenging at all, considering the quality and the size of our assets. We, at the end of the March quarter, had just over $12.5 million in cash and available for sale assets. Which will give us a runway through till at least the middle of 2022. I was the founder of the company, and I remain the largest shareholder. The board actually has about 30% of the issued capital of the company. Very, very, very small and nimble board, as is usual with ASX listed companies. So we're a project generator, and we have a substantial number of projects in mainly in Western Australia, and a focus there is the Wingie project for highly prospective for gold and nickel. But this evening we'll be focusing on, or this morning, depending on where you are in the world, focusing on our US lithium assets, and principally our Mcdermott flagship project located on the Oregon-Nevada border. Obviously the demand, the backdrop for lithium is looking very, very strong, a big shortfall forecast, with demand being driven by the increasing number of EVs that are forecast to be produced. Started in China, then in Europe, and now obviously the US is a big electrification push underway. And the Biden election, very positive, a big spend on to achieve net zero emissions by 2050 by electrifying the US. And importantly, we're seeing, and we have seen, bipartisan support for the development of US critical mineral projects. Howard earlier on mentioned the white paper, the 100-day review on the, and they had statements like the Biden-Harris administration will immediately secure an end-to-end domestic supply chain for advanced batteries, and will immediately invest in sustainable domestic and international production and processing of critical minerals. These are very positive statements and give us great confidence. And the head of the Department of Energy is reinforcing that, securing a domestic source for lithium, for domestic manufacture of lithium-ion batteries to make sure that the supply chain for the big EV production lines, there's no breaks in the supply chain. And lots of battery factories, being under construction, some already operating, and plenty more planned. So why? Now we've heard the few presentations on lithium have been hard rock, spodumene deposits, and the other main class of lithium deposits are brines, which are mainly in Chile and Argentina. But our deposits, and we've two of them, the Mcdermott deposit and also another one in Nevada called Clayton North, that is a sediment-hosted lithium deposit, and some people call them claystone deposits, but we think that's a bit of a misnomer. As geologists, you'll see from the core, it's not all claystone that hosts the lithium mineralisation. So why were we attracted to these? Well, firstly, they've got scale. You mentioned how the Lithium Americas Thacker Pass deposit just to the south of our Mcdermott deposit. Their PFS envisaged a 46-year mine life, producing 30,000 tonnes per annum of lithium carbonate for the first 3 or 4 years, and then the back end of the project, the majority of the project, producing at 60,000 tonne per annum. So these are like the porphyry coppers of the lithium world. They're very big, they're low grade, but they do have the potential, because of their scale, to produce lithium at low cost, certainly in the bottom quartile. And if you add in byproduct credits, well below the cost of most brine and hard rock producers. So that attracted us to these deposits. Scale and the all-up costs of producing lithium chemicals. And the flow sheets produced by the 3 most advanced proponents of this style of mineralisation, in a way, they're a kind of a hybrid between brines and pegmatites. Pegmatites are hard, and the mining and crushing costs are high, but then you can concentrate them using DMS. Brines, you pump the lithium-bearing saline solution into evaporation ponds and then wait 2 years for it to concentrate, and then purify it. Sediment-hosted deposits are sort of something in between. The rocks are very soft, and so they've got low mining and crushing costs. We're fortunate that our deposit, we've demonstrated we can upgrade it using a very simple mechanical beneficiation process. And then from there on, you leach it most likely with sulfuric acid, and then the purification process at the back end is very similar to what it is for brines. So the 2 projects, Mcdermott on the Oregon-Nevada border and Clayton North. So we'll go straight into Mcdermott. Mcdermott sits within a large volcanic crater or caldera called the Mcdermott caldera, outlined here in this dotted yellow line. Thacker Pass, Lithium Americas deposit, sits at the southern end of the caldera, and our lithium project deposit, Mcdermott, sits at the northern end. We have claims that straddle the Oregon-Nevada border, which gives us not only, obviously the ability to, all going well, develop on both sides of the border, but also optionality when it comes to processing as to which side of the border we ultimately process on. Howard, you mentioned that we recently passed the Thacker Pass deposit as far as contained lithium carbonate equivalent. But look, there's excellent potential for both deposits to grow substantially, and I'll show you that through the presentation. This is what the Mcdermott deposit looks like. This is the top of it. So this is the top 40 metres of the deposit. These are the lithium-rich sediments sticking out of the ground. So the strip ratio is 0. And then it carries on for another 120 odd metres on average below this the valley floor here. In the back here, this is the rim of the Mcdermott caldera on the skyline there. And just a schematic showing that you've got these, heterogeneous sediments that formed within the caldera, the Mcdermott caldera, which hosts the lithium mineralisation, sitting on top of a volcanic basement. So we drill from surface, and we stop when we hit the basement. And on average, as I said, it's around 160 metres average thickness, but we've had up to about over 180 metres of thickness of sediments. And every single hole that we've drilled has had lithium, broad lithium intercepts in it over very large areas. It's remarkably continuous, this mineralisation. Just some happy snaps of our drilling program at the end of last year. We got a bit of a late start and then had to stop at the middle of December after the guys came back from Thanksgiving with COVID. But you can see here, this is a rig sitting on top of mineralisation, and all this material through here you can see in the middle distance is all basically ore, mineralised sediments. What does the core look like? It's a typical core here, quite heterogeneous, as I said. So not all claystone. That little band there would be a claystone, but there's some sandy, tufaceous bands and some mudstones and silts, but low and horizontally bedded. So as I said, it's and from surface. So very low strip ratio, soft mineralisation, soft host rocks, so low cost mining and crushing. And we've also had fantastic metallurgical test work results, which I'll touch on. Some typical sections. You can see there's a 5-to-1 vertical exaggeration, so we can show this better. But these holes are approximately 400 to 500 metres apart, and basically you can see this broad sort of mineralisation from surface to the volcanic basement below. Our resource, which I'll touch on in a second, very conservatively calculated. We've only taken the top 100 metres. So we've left a lot sitting below the potential resource sitting below the what is the current resource. This intercept, for example, hole 7, that 35 metres, that starts at 99 metres. So 34 metres of that intercept is sitting below the outside the current resource. So there's plenty of potential to capture more mineralisation by just extending the resource a bit deeper. So what does it look like at the moment? This is currently we've got an indicated and inferred resource. The indicated is shown in the yellow here, where we've got a higher density of drilling, and then you step outside that and the drilling density drops off a bit, and so that's being classified currently as inferred. And then what's called an exploration target range, which is where we can see the mineralisation extending out to the west here. You can see it exposed in cuttings. You can see it out here in some new claims that we pegged in March, and were just granted last week. So you can see the mineralisation continues a lot further out to the west, but is currently not included in the resource. But out here, we're comfortable to call it a pre-resource or exploration target range. So the current resource at 1,000 ppm cutoff, basically indicated and inferred 1.4 billion tonnes at 1320 ppm lithium for 10.1 million tonnes of lithium carbonate equivalent. And that, as I said, is surrounded by an exploration target range or pre-resource mineralisation at the same cutoff grade. That's basically, if you take the midpoint of the upper and lower limit, both tonnes and grade, that gives you another 12.5 million tonnes of lithium carbonate equivalent. So you can see when I talked about this being these style of deposits being equivalent to the porphyry coppers of the lithium world, you can sort of get a feel for the scale of these things. They are enormous. They do have the potential to supply lithium into the US market for decades. This is just a bubble.
Lindsay, we need to wrap up in the next kind of minute, please.
Sure. Okay, just how we sit in the scale of things. Sonora, that's the one in Mexico, that's just been acquired by Ganfeng. So that's, will no longer be available to the US. So the key to this is the metallurgy. We've demonstrated, as I said, that we can beneficiate the ore. We get a 60% uplift in the head grade via attrition scrubbing, which is a simple mechanical process which basically separates the clay fraction from the sandy fraction. And by removing that sand fraction, because the clay fraction's the part of the sediment that has most of the lithium in it, we also remove a lot of the acid-consuming minerals. So we wind up reducing our acid consumption as well. And that's going to, that's very favourable for the project economics, because, the main operating costs for this style of mineralisation, style of deposit, is acid. Okay.
Lindsay, you've got, forgive me, just because we're running over. Just a quick question. Some investors are asking, do you plan to list in North America, like Canada or the US?
Yes, we're looking at 3 options, Howard. We believe this project the ultimate owner of this project will be a large US corporation. It just makes sense, a company with the balance sheet, with the political support, and with the technical capacity to do it justice. We could do a partner with an OEM or a petrochemical company or similar, a large listed corporation. We could list it in the US via either say a SPAC or via OTC, similar to what Piedmont has done. And we're considering all options at the moment, but we definitely, we believe this within the next 6 months, maybe 12 months, this project will be in North American hands in one form or another.
Okay, because your company is largely a project generator, and you've obviously defined a very big resource here. The scoping study, I mean, are you planning, what's the thought process? 20,000, 25,000, 30,000? Have you thought, is it carbonate, hydroxide? Any estimates on CapEx, or we just have to wait and see?
Yeah, you'll have to wait and see. But having said that, you've got to start somewhere. You've got a scoping study is basically that's it. It's to scope out, the potential routes to do more work on. So, and we will be constrained by what we can report. The ASX is a lot stricter on the constraints on what junior companies with very, very large projects can report. But we do certainly want to get the operating costs out into the market, if nothing else. And people can then, there are analysts sitting there with models ready to go to plug in. They've already looked at, the capex of our peers who have already, well documented, Thacker Pass and Ioneer with their Rhyolite Ridge deposit. So there's mining costs out there. So we're working through the elements, and we should hope to next month, by the end of the next month.
Okay, great. Lindsay, thank you very much. Forgive me for interrupting. We're just in the interest of time. Thank you, Frontier and Critical Elements, for another good panel. I hope, thank you, Minds and Money, and I hope all of your viewers appreciated the introduction of some news stories here, as well as updates from the ones we've had in previous quarters. Thanks very much, Andy, and the Minds and Money team.